Bismillahirrahmanirrahim. Hi everyone, welcome back. So, enjoying the lectures, huh? Step number 4, according to agenda. Part B, question Chuckle, Specimen 1, 3 marks. Now, focus point, Exhibit 2. Come on, requirement. Explain briefly why classification of Chuckle's company investment in Grin should change on 1st April XX to that of subsidiary. This is the requirement. Before starting the question, must have to develop a great plan. Number one, time management. 20/80 rules. 6 minutes to have 20%. That means 1 to 2 minutes need to invest for understanding the requirement and composing. Execution time 4 to 5 minutes. Draft and assemble. You must ensure that you have read and understand the requirement very carefully. So be careful about this. Be careful that you have read and understand the requirement. Once again, why classification should change from associate to subsidiary. So actually requirement is that you have to demonstrate your ability about application of IFRS 10. Why it's subsidiary? It's not only to write the thing that it's become subsidiary to and then account for according to the acquisition accounting. No. Here the question is that why, what the reason that the company, the Chuckle company should report as subsidiary and change classification from associate to subsidiary. This is called application. So students, the rule number 2 must be applied before starting the question. That's called mind mapping. First of all, you need to develop your mindset what I will write while drafting the answer. But before that, with this type of question, I suggest you need to read the context of the question once again. And this happens sometimes, no worries. Student enter with the context of the question once again to make more clarification. It's a part of the planning. Now, here, Chuckle acquired further 18% of Grin company's equity 1st April XX. Further means previous 30%, further 18%, total 48%. So total 48%, that means that here the answer is not straightforward because here voting rights, it's not in terms of majority. It's still under 50%, 48%. So we have to refer the further guidelines of IFRS 10 about the control, including 3 points within the case. Number one, the first one, the remaining 52% of equity is owned by few other investors, none of which own more than 10% of equity of Grin company. IFRS 10 says that if you have significant minority, that's 48%, and the other shareholders are very scattered, dispersed. So that means other shareholders are not able to influence the decision making of Grin's company, here the case. So Chuckle's company will be able to control the decision making if the case about, not in the in this case, if the case about the dispersed, scattered shareholders. But in this case, the other shareholders are few other investors. We cannot say that here the other shareholders are dispersed or scattered. Few other investors, it's possible that they collect together and influence the decision making of grids. And this issue will actually create the hurdles for Chuckle to control uh, the decision making of the Grins company. So that means the first point, it's not clear, it's vague with the first point with respect to few other investors. That's investment in Grin, the Chuckles have a control or not. But if we move towards the second point, so IFRS 10 further provide guidance. The other factors concerning the control, it's about the share option. So here mentioned, Chuckle also acquired with the same date the share options. And this is exercisable any time until 31st March etc. Further guidance by IFRS 10. First consider, is this exercise price, is this option valuable at the time of investment? Here the answer is no, because the share exercise price on 1st April XX was just above the market price of Grins company shares. But the story is not over here. IFRS 10 says that if option is not valuable right now, also need to consider, is it possible that during the life of the option, any chances that option become valuable or in the money? Valuable or in the money are interchangeable words. So next line, Grin companies has been profitable for a number of years and share price has been on an upward trend which is expected to continue. Expected to continue. So with this point, we can say that this option right now is not valuable, but in future, the chances the Chuckle will exercise the share options. Furthermore, IFRS 10 also provide guidance. What will be the position if investor become able to exercise the option? Chuckles would increase its ownership to 60% should it exercise its right. Should it exercise its right. That means if we collect the point of share option, means right now not valuable, but chances that share option become exercisable, and after that Chuckle will be able to control 60% share. With that basis, the second point, we can justify that Chuckle should report Grins company as subsidiary. But sometimes students ask a question that, sir, if now at 1st April XX we declared the Grins as subsidiary, and after some time the option it's not become not valuable. So mark my word, accounting and reporting is based on judgment. Whenever you are reporting your financial statement, accounting standard says that best reliable available information at the date of reporting of the financial statement. That's all. What will happen in future? No worries. We will face the issue in future and then report it accordingly. But right now at 1st April X6, do the best measurement with the available reliable information. So based on this, Chuckle will declare Grins as subsidiary. Furthermore, one more point, it is believed that there would be an additional cost saving should additional shares be acquired, as decision at board level could be made more efficiently. This last line means that The acquirer, the Chuckle board, consider that if we invest with a grin or the share option become exercisable, we will be able to get more cost saving. So the business model in terms of synergy will develop. So that is the point. So for investor, it's also valuable to exercise the share option, to invest with more, invest in more equities. Invest in more shares to get the shares of green companies. So first point about the other investor, it's not clear. It's not based on that. We are not clear about the subsidy. But further 2 points: potential share options and additional shares result additional cost saving. Based on these 2 points, we can declare that this particular investment of Chuckle in Grins company must be declared as subsidy. So by reading this context, you are very much clear. But the point is that, how to draft that answer? How to draft that particular answer? Now come on, one by one. You have to jot down the points. Consider this picture. Huh? You have to jot down that point one by one. Knowledge and application. Knowledge and application. One by one. First point, 18% addition. So you have to write the answer with the 18% addition. First, start with this. So you will mention that yes, after 18% addition, the Chuckle become most significant minority first, but need to assess about to get the power or not. For the assessment of the power with only 18% addition, we need to consider other 52% shareholders. That's unconnected or disbursed. But in this case, they are not unconnected or disbursed because this information is not much available. No? It's not clear exactly. So based on this 18% information, the situation is not clear, but we need to consider more points. Share options. You need to onboard share options. So that means your draft, your answer must be based on 2 points: 18% options, addition, and share options. So first of all, you have to refer the IFRS 10 point about the share option as a knowledge. What IFRS 10 says. That's about potential voting rights is also a considerable point. If evaluating the aspect of control over the investing, and for potential voting rights, assess the substance means not only consider now position, also consider future aspects. It's not in the money or valuable right now, okay, but what about the position of option over the life? So assess substantive means option evaluation over the life. Then apply with the case. Case means here the case. Now not in the money, that's not valuable, but share price of Grins expected to increase. Because in question mentioned that they have been profitable since last year's, since couple of years, and the price is in increasing trend. And also for investor acquirer, it's beneficial as a cost saving activity. That's declared by the board. So on that basis, You have to consider that point as a subsidy. Do remember 18% addition point is 1 mark with the marking scheme. Share options have been 1 mark. With this total aspect, that's you will be able to get 2 marks. Sometime this happens. Sir, a lot of efforts required here, but only we will be able to get 2 marks. No worries about that. Further, the final comments. Another point. Final comments. Then you make a final comment. Further 18% plus the share option chances of exercisable, and we will, after share option exercising, we will be able to get 60% shareholding. That means we have a control and we should reclassify from associate to subsidiary. Try to conclude your answer exactly what examiner mentioned with the requirement. 1 more mark. So total 3 marks here. That's a point. Let's refer the drafted suggested answer. Come on. This is the suggested answer quickly. That's a special gift for you. Number 1, ignore the model answer. Just focus this draft answer. First, you must make a heading of these 2 points. Acquisition of 18% equity and other factor that is called share option. Number 1, very simple. We have all done it. It's just about the drafting. Number 1, acquisition of extra 18% of equity. 1st April XX now becomes Chuckle as a significant minority investor. No other investor owns more than 10% of Chuckles, own a much higher proportional, that is 48%. Higher than that is 48%. It would appear that power has been obtained if there were a large number of unconnected dispersed shareholders. However, other shareholders owned just a few other investors, so it was not clear that power was obtained. So we need to consider other factors. Other factors need to consider that share options. Potential voting rights should be considered in assessment of control. For these to be included in the assessment, rights should be evaluated on substance basis. What is the meaning of substance? You need to explain all these points that we have covered. Usually, if rights currently exercisable and are in the money, so it is worthwhile for an investor to acquire extra shares. But in the case of Chuckle, share options which are currently not exercisable, currently exercisable but not in the money, because exercise price above the share price of the grain company. It can be seen that they are only just out of money. But not to ignore, the share price of grain is expected to increase and cost saving are expected from further acquisition of shares. It seems therefore that share options would be deemed to be substantive. By exercising these options, Chuckle would enable to obtain 60% shareholding, and can be concluded that Chuckle company is able to exercise power over grain from 1st April XX. So grain company should be reclassified from associate to subsidiary at that date. So that is about the student caliber suggested answer. With final comments. Now, one very important point for you, and that is about examiner reports inside. One by one. Very important. Need to focus this point. Many candidates concentrated on the ownership. Many students concentrated on the ownership of 48% and concluded that this was not enough to control and therefore incorrectly concluded that the status should not change. If someone write the answer in this manner, actually lack of knowledge of IFRS 10. To gain a good marks, candidate not only needed to consider the purchase of additional holding, but also the potential voting rights. That's a point. This is what the examiner point. These are the points to consider. So I hope that this part of the video also valuable for you. So thank you very much about this part of the video. Wait for the next step, next agenda point. Thank you very much. Assalamu alaikum.